So where are you looking these days? I know crypto is an area that you've thought is potentially rife with, people who are trying to make a fast buck.
Right. So, I mean, we've been short a few crypto names in the past. These are crypto miners. I mean, I don't spend my time looking at Dogecoin versus Bitcoin, and that's pretty much irrelevant to me. But when you have a lot of money flow into a space, you know that you're going to get scammers and people trying to take advantage of that. So we're generally not thematic, but when I look back on the past year and a half, a lot of our work has been in the green tech space, or really these fake ESG companies, because there's so much money that has been thrown at trying to save the world through public companies that so many of these companies
are
are
redundant, Carson?
Trying to save the world through
fake ESG. Is there real ESG?
Well, ESG zealots would tell you.
Didn't say yes.
No, I mean, look, I would like to save the world, okay? Like, I believe that we do have problems. However, these companies that I've seen are not the ones who are going to save us. Many of these are just money grabs dressed up in, clad in green, and, as well as the dollar green. And so when I look at the companies we've shorted, XL Fleet, Danimer, which was a bioplastics company, Sunrun most recently, and Hannon Armstrong. I mean, these are all companies that are grifting in their own way. And when you get into the solar space, like Sunrun, I mean, they're grifting the U.S. government by inflating the basis for their tax subsidies. So they're screwing the U.S. government. They're screwing investors by basically creating this illusion of a lot of value at the end of the rainbow. And by the way, as rates have done this, I think Sunrun is still discounting these 25-year-long assets by, 5%? That's their discount rate? I mean, it's completely disingenuous. So there's so much froth in that space that still needs to unwind.
What do these companies say in response, these specific ones you just mentioned?
Oh, I mean, they say, you're wrong and you don't understand. They always say you don't understand our business. I mean, this goes back to like these Chinese frauds that we started shorting in 2010. You don't understand our business. Well, when your real business is being a public company, we understand it pretty well.
The ESG funds have already underperformed. What happens when the actual air comes out of what you're describing now? They're going to underperform even more miserably.
So you know what's funny?
Will they go away finally?
Well, you know what's funny is that some people will pound the table and tell you that ESG funds have outperformed. And there was an op-ed written by the managing editor of one of your competitors in the media space a few weeks ago, arguing that Ron DeSantis is wrong because ESG funds always outperform. And they cited a few ESG index funds. And I went in and looked at these indices, and the top 15 companies are the exact same as the top 15 in the S&P 500. The weightings are just maybe a few tens of basis points different, but the fees are 2/3 higher than on S&P Spiders. So if you look at it, so if you look at it that way, you could say the ESG funds have outperformed, but this cannot be real ESG. I mean, J&J is one of the top holdings, and I'm like, well, I mean, what's the theory there? That if your company is so big that one division does something horrible, like asbestos and talcum powder, that we can overlook it because you've got all these other divisions that don't seem to be, giving people cancer? I mean, is that what gives you a high ESG score?